Okay, so we're short yesterday. If we were short yesterday and I believe we are in profit, we would just want to close out if we have not already closed out at 149.7. It was a small size short, but we would want to close out. Let's see why. Okay, so we're looking at that 4-hour chart. We're having, of course, double heads and shoulders. This is pertaining to what we're seeing on the daily chart in the first place. We are right about here at these levels. We had a very big head and we're doing these shoulders pertaining to shoulder B and shoulder 1 at that zone. Would always want to sell the top level of the shoulder at 152.7, 152.3 and take profit towards the neckline. You're gonna see multiple shoulders. We have to keep the pattern into perspective, seriously. Okay, so let's understand what we will try to make opportunity of: the volatility and the pattern. So the pattern here right now, the market is doing 150.6, so 150.6 is below that level, 151. We're having this massive head and we're having multiple shoulders. Okay, so that's a 1, 2, 3, 4. It's actually now concluding in a 5. It did conclude, it did do 149.7, so we did spike at the neckline. We could do another spike, but it is not really confirmed. It's not really secure. You're gonna have a bounce out of this neckline very soon, because this is really a wave 5 and you're gonna be doing that head. You're gonna be doing a small shoulder or this kind of shoulder. So you're looking at that shoulder that has a top. This is a daily chart that has top 1 and top 2. So you will want to sell into that shoulder. These shoulders always come at 152.7, maybe a bit higher at that point. You even have 153.3, but you're looking at shoulder levels as of 152.7. We're gonna be doing shoulders and we're gonna be retesting that neckline. We're having, of course, double heads and having that shoulder here. So we expect to do just one shoulder this time, maybe one and a very smaller shoulder before we break the neckline, if the momentum is actually indicative of a neckline break. We are selling rejection at overbought level. All right, let's take a look now at the actual wave structure. Remember, we have a very big head, a massive head, and that is that shoulder that we're looking at. Comes in 153 and 152.5 is our shoulder level. Let's take a look at the segregation. There is, of course, a neckline here. Okay, so there was a 1, 2, there was a 3, 4, there's a high degree 3, there was a 4. We expect that there is a high degree 1 here. Okay, and there was a 2. Now this market, that's again a 4-hour chart, already did this 3. There was an internal 1, 2 here at the neckline. There was a 3, 4. That 5 actually was unfolding in an ending diagonal, we think, and did terminate at 149.7, or could be about to terminate now. It's a level 5 here in yellow at the bottom of level 3. At that point, we're going to have a higher degree correction 4. It should take us to resist below level 1, or at least below the neckline, or below higher degree level 1. So this takes us to 152.3, 151.9. You remember all these levels since the day before yesterday, and the stop would just have to be above level 2, which is at 153.5 and 153.7. Okay, so the segregation here, it shows that this was a high degree 3. It should be labeled in a different color, and now we're doing a high degree 5, but it would retract because it's doing a correction 4 into that high degree 5 before it moves down. This is your high degree 5 here to 148.5, just below the neckline. So we would want to short. If we already short, again, we close. We will take a good look at the 15-minute chart to see appropriate target levels. If we are short and we're not in profit and it's only half size, we would add, if the market moves higher, to 152.3 and 152. We're looking at these two levels here. We're looking at 151.84, which is about 152, and 152.3. You could even get higher levels. We do projections on the 15 minutes and 5 minutes once we have a breakout in order to know the entry level to short. Let's get back to, let's move on to the 5-minute chart now. That is the current wave 3 that is moving lower. It has been segregated again from the neckline at 152.5. There's a 1-2. All of this, usually we think it's an internal wave 3 or a higher degree 3. It's showing here as a higher degree 3. There's a 4. Now there's been a 1-2. There has been a 3. There's a 4. This is your final leg 5 that's going on now. We close out. This could truncate. It doesn't have to go all the way down to the market bottom. It could really truncate because your wave 5 could actually be an ending diagonal. It's very small, 1, 2, 3, 4, 5, somewhere here. So this could truncate before the market bottom. We're moving up in a degree 4 correction. Remember, this is a 5, this is a 1. So we're going to be testing that neckline, if not spiking above that neckline. We'll just take a test at that neckline, 152.37 again, and 152.4, and 151.86 or 151.9. Sell these levels. We have a stop at 153.7. We'd rather be a bit higher so that we're out of the whole head and shoulder formation altogether. Having double heads here at that yellow arrow, it's only 153.5. We'll take it above 153.5, becomes 153.7. So we're shorting 152 and 152.3. We're having a stop at 153.7. It's something like 150 points. We're going to 149.5 and 148.5.